Hey guys, welcome to another video brought to you by Total Control Traders. We are going to do a midnight video today since we missed a video yesterday. Going to do a market deep dive as there are lots of concerns going around right now in the chat room as well as people messaging me. Now, one of the messages in the chat room was overall trend is a downward trend. That is that depends how you look at it. It's if you're looking at the shorter term 30-minute, hourly, 4 hours, 8 hours, even daily, yes, well, not daily, 8 hours downward trend. Yeah, so on the daily we are still in an uptrend. Okay, so that is something to know. Even though we are weak, we are trading under the daily 8, we are still in the uptrend. So with today's video, we're going to do a market deep dive to look at where we should be anticipating a bounce. What exactly is happening in the market? We want to find the opportunity. I believe the opportunity is coming. It's if not here already. Okay. I have a strong belief that the opportunity is going to be today. Regardless, I will be making trades today. Quite a bit of trades, likely quite a bit of trades. So let's see what this brings us. Okay. First, on the daily. Now this includes today, Tuesday, after hours or pre-market. We are now 6 days in a row red. That doesn't mean much, right? But if you look on the weekly, now it's going to be a bit hard to read, but let's do that. If you look on the weekly, we are still forming a weekly bull flag. Bear volume is not considerable. We were seeing a bit of a bear divergence, so that is playing out right now. Bear volume is not considerable enough yet for me to be concerned. And as for volumes blocking, all right, and as for the daily volume, you gotta look back. Okay, look at these higher volume. Is this really concerning? Not really, not to me. When I look at it, it's this is more so an opportunity that we're looking at. Today, we popped up, rejected from the daily 8. That is a little bit of a red flag. So right now, the market overall is a mixed signal. There are red flags. There are, however, there is no breakdowns. So let's take a look at what exactly is going on. Let's do a deep dive that like we've never done before. All right. So actually, let's go back to the SPX for a second. On the SPX, what we're seeing right now is a 4-hour bull divergence forming. You can see that we have just made new lower prices with slight upward on our side. So slight bull divergence right now. We're going to have to see what goes on here. We are in that key zone. This, I consider the last key zone to hold down to the 0.382. As long as the 0.382 is not lost, we'll remain bullish, as we are looking at weekly bull flag forming. On the NAS, so again, this circles back to depending on what type of trader you are, whether if you are a scalp trader, swing trader, medium term swing trader, short term, or long term. As some of you know, I've been building a position in more so investing than trading, using the profits from trading. So that portion of it is ultimately investment, and we'll be looking at a hold throughout 2021. Those portions I will consider exiting if we break that 0.382. Now let's look at NAS. NAS is the one that has been dragging us down, dragging the market down, and we have just hit that GP. We've passed it a little bit, revisited that previous high. Same idea, must hold GP. Okay, we could very well be looking at a little more drop before the market opens today, down to that 0.786, and this would provide great opportunity because we can, if we look at this, there is a key zone right around here. Not as significant, but it does line up with something. Ideally, I want to see a hold of this GP for a stronger bounce opportunity. If we lose this, the bounce would be ideal, but know that the 4-hour 8 would be lower as well, meaning our bounce would not bring us as high. Now, I just sent a message to our trading community. The bounce here is going to be determining of what is going to happen. What I want to see is a bounce past this 4-hour 8 as a first step would be past the 30-minute 8, then following that the hourly 8. But ultimately, I want to see a bounce past the 4-hour 8 back into this key resistance zone at the very minimum. From this drop, let's see where the fibs lining up with. So if we're looking at the 0.5, it'll be around the upper end of the key zone, the previous key zone. So 0.5, I think it would make sense. That would be the minimum that I want to see. But if that is where we start seeing rejection from, we'll likely be exiting most of the bull positions. This right now is a key moment in market, and we'll get into further details on why. Now, we see NAS is the one dragging the market down. SPX still in that weekly bull flag formation. NAS, we have lost the weekly 8. Okay, that is notable. We have lost the weekly 8 and very likely to see increasing bear volume from here. So that is a red flag. Okay, next is Dow. This negates that last red flag. Dow has not lost anything basically. So far the week has been green. All Dow has done was actually a back test of this previous high, and we are bouncing from there. We're even holding the daily 8. There are upper wicks forming, but the daily 8 is still holding right now. So this is very interesting in the sense that, you know, we are seeing a sector rotation, and that's why you're seeing names green while other names are red, just complete red. Anything to do with the NAS, Apple, Tesla, Amazon, you're likely to see further red, or you're likely to see red through the past few days. However, if you look at names like QS, FSR, AAL, they've been green. So there is a sector rotation going on right now, and that is very notable because from here you need to start now it becomes more a name picking kind of environment versus before, where it's just you put your money somewhere and it's likely to make you some money. But now you put your money in NAS, it is less likely to make you money. So something to note that you want to be aware of. Dow is holding up strong right now. Now let's get into the fun part, the indicators, the forecasters. All right, so on the US 10-year over 2-year yield, we are seeing lots of upper wicks forming, but we did see lots of upper wicks forming back here as well. We are still holding that daily 8, so no major concern from the bond yield, US 10-year over 2-year yet. We are near that all-time high mark. Did this get moved? Okay, we may be rejecting from the all-time high mark. Yeah, we are rejecting from the all-time high mark right now. we are extended on the weekly, but you can see it is still slowly grinding up. So no major red flags on US bond yield yet. VIX. Now this is the main one where it's making me think that the market is not ready to go into consolidation yet. This right now is just a correction. And if we look at this, let's look at the weekly, it'll make it easier. The last time that we saw a pop was 13 weeks. The time before that was 8 weeks. Time before that was 12 weeks. And the one before that was 12 weeks. And I did this throughout all the way back to this one, the 2018 pullback. On average, it's about somewhere between 8 to 12 weeks on the shorter term ones. On the longer term, of course, you can see here it's much longer. But on average, let's call it 8 to 12. Regardless, the last one we've recently had only brings us to now 4 weeks. 4 weeks. And as you can see from here, when you're in a wedge, towards the end of the wedge, if you do see a pop, it will really pop. Same with back here, but this one was not towards the end of the wedge. This one, elongated descending wedge. That is what I'm anticipating on this current one. I don't anticipate another pop because we've only recently had one. And if we were to look at where we reacted yesterday, we rejected from that upper trend line as well as the key zone. A complete rejection, came back tested at 88. Today, so far, because of the most recent drop we're seeing in the market, which I'm still watching on, we're seeing a spike. But without a break of this upper trend line, I would not be concerned. Just gonna go back to the market, quickly check here. Bull divergence. Let's see how this plays out. So that's on the SPX. Bull divergence on the NAS as well on the 5-minute. Bull divergence on the Dow as well on the 5-minute. So I want to see where this bounce brings us. $4-hour 8 on the Dow is more than reasonable. 4-hour 8 on the NAS, very minimal as a bounce that I want to see. 4-hour 8 on the SPX would somewhat make sense, bringing us to this trend line that's been shutting us down over and over. All right, back to the market deep dive. So VIX, still no concerns yet. DXY. This one is where I'm keeping my eyes very glued to right now. This head and shoulder pattern with the neckline over here, we have now broken bear, but we are seeing a little bit of lack of follow through so far, potentially due to the fact that on the daily we are a little bit extended from the daily 8. So let's take a look at historically. Historically, we don't seem to get too extended from the daily 8 on US dollars. So this is a minor red flag right now, where when we get extended with a double bottom, such as last time, we could see a bounce to a higher high. That would be a cause for concern. If we see a bounce breaking this 91.08 or 91.01, that would be the concern. Right now, we are seeing a bounce. Lack of follow through on the loss of this previous low. So it is minor concern right now for bull plays. So we can see that there is still reaction to this trend line. Let's watch for what happens when we revisit it again. So overall, we are at that key area where I want to see a hold. On SPX, we're near there. 0.382 must hold. On NAS, we are already there. GP. And it looks like we might want to go down to the 0.786, which would provide very nice opportunity for bull plays, even as just as a bounce. This, we are getting very extended from the 8-hour 8, 4-hour 8, as well as the daily 8. That's very extended from the daily 8. So say if we were to go down to the 0.786, the bounce that we'd be looking at would be back to this zone. So if you've been in cash this whole time, this should be great opportunity for you. I've been, as of this morning, I trimmed some big positions. And from here, I will be looking to play this bounce. It's going to be great opportunity. There's going to be ways to, you know, make your account go higher. But what I'm looking at right now, I'm near that protection point of my account. And once that's been hit, today will be the day that I make decisions on majority of the positions. So let's see what the market plays out in this after hours. I want to see what the volume looks like. Okay, so there is still bear volume on the NAS. Similar on the SPX. Lower on the Dow. Is it significant? Slight decreasing. It's notable, but I wouldn't call it significant. You know, compare this kind of volume to this kind of volume. So it's notable, somewhat sustained. But yeah, key area for the market. Overall thought, this is an opportunity. Market is in a weekly bull flag formation, except for the NAS. So if you're playing bounce, if you're playing, if you're playing the bounce, just know what tickers showed relative strength from yesterday. Those are likely your ideal tickers to be playing going forward for this bounce. All right. So that's it for the market deep dive. Let's take a look at some tickers. We'll go through the hottest tickers first. First one, Bitcoin. Big rejection, hey? Bull divergence played out really nicely. Straight up, never lost at 88. Hit the 1-to-1 extension target. Slightly over it. Then now we are seeing bear volume coming in. Big time bear volume coming in. Potential for another cause for why the market is going down, because Bitcoin seemed to be in sync with the market, relatively in sync with the market lately. So decreasing volume, now we're seeing a spike in bear volume. Big bear divergence as well. What I would expect from here is likely a longer term consolidation based on this, how big this bear divergence is, and timeline wise, weekly, it's a weekly bear divergence. So from here, would be expecting a longer term consolidation. We can see a huge shutdown. This is no longer an ideal bull flag formation anymore. We've already went past last week's low. So it's not going to be looking at something like this anymore. This will take time to correct. Bitcoin, bearish. Next, NVIDIA. On NVIDIA, we are seeing a little bit more bearish action than ideal for a bull flag setup. Increasing bear volume, earnings coming up on tomorrow. Why is it showing on this candlestick? Probably after hours of today. Or, yeah, we'll take a look. But remember, this is a long-term breakout. So far, a little bit of a red flag because breakout, lack of follow through. Now we're seeing increasing bear volume. Earnings will dictate which direction this is going to go. So being cautious on NVIDIA, but not taking my eyes off of it. This, if it reverses based on earning, we'll be looking at lots of upside. Earnings likely to dictate where we're going. Next, PLTR. One of my my current top play is PLTR. Reason for that is if you look at these volumes indicate that there will be higher prices to come. On the longer term, yesterday we held that low end of the key zone, 28 bucks. Slight increase on bear volume. Buyers are a little bit lacking right now, but if we look at the volume that came in on Thursday, Friday, these two highest volume ever since the IPO, even outweighing the IPO volume. These three volumes alone have me convinced that this is going to be going higher. The 88 has caught up. Let's see what today brings. Ultimately, we've hit that 0.382 from the recent drop. And because market is in consolidation or correction phase, we're gonna need a little bit of market participation in order for this to see further follow through. But I don't believe the bounce, even if this is just a bounce, I don't believe the bounce is done yet. Because ultimately we're looking at from the high of 45 to the low, the 0.382 would bring us to 32.33. That would be this would be the very minimum I'm looking at for this bounce play. But based on volume, would be expecting higher prices. Higher than 32.33. Next one, FSR. Alright, it's an interesting chart because yesterday we saw nice bull action, keeping us. Now this one's going to have to be corrected. Yeah, that looks better. So we are still in a daily bull flag formation. This huge upper wick, not most ideal, but earnings coming up similar to NVIDIA. February 25th, likely to dictate the direction of this chart. From here, based on this volume, highest bull volume ever, similar to PLTR, would expect higher prices to come. Next, QS. It's a little bit similar to FSR. There's a lot of similarities that you're going to notice in different charts lately. And because of the NAS correction, SPX, and Dow's holding up, the rotation of sectors, very notable. So on QS today, we are seeing another big upward wick, but there is a lack of sellers. With these volumes, I do believe that there is going to be higher prices to come. We are waiting for that DDA to catch up right now. And this is after multiple good news too, right? We saw the gap up. We saw the continuation on the run. 4-hour bull flag Haven't touched the 4-hour 8 yet. We are still trading over this trend line. Not a very notable trend line, but yeah, there's a support back here, rejection here. Not a very notable trend line yet. Thinking there should be other trend lines developing, but not seeing anything as of right now. So when you're having trouble finding a trend line, first indication that you should understand is likely a very choppy market. In a easy to find trend line environment, that there are clear trends to be found. Like, duh, right? So if there's clear trends, it should be easy to play. Right now, it's gonna be harder to make money. You're gonna need to pick the right names. QS overall still looking up bullish. Lack of bear volume. We did see a little bit more yesterday, but still not considerable. Next, Zoom. Holding that GP, the must hold zone. From here, today will be key. I want to see a reversal from here. If we lose this GP based on the volume yesterday, and if we see an increasing volume on the first 15-30 minutes, would be considering exiting the bull positions. Now this is interesting. The last 15 minutes of the market, Zoom had a big volume pop. So watch it very closely upon open of today's market. Based on this type of volume at the end of day, people wanted to get in. Someone wanted to get in. Just gonna quickly check the market again. So we are still getting extended. This is gonna provide some very nice opportunities when the market opens. If the market continues to be this way, it's gonna be some very nice opportunities. Wow, look how far we're extended from the 88 on NAS. Bull divergence is now negating. So not ideal, because we're gonna want to see, and there's no bull divergence. Actually, oh, there's a huge bull divergence on the daily. Even if we drop to the 0.782 or 786, there's gonna be a huge bull divergence here on the daily. This bounce should be very nice. Anyways, that is it for the hottest tickers. Gonna run through some of our always watch as well as our new tickers that we're watching. First one, Tesla. We are in that GP zone. Pre-market, there's been no trades yet, so we are still reflecting in that same price area. Back tested the long-term channel, very long-term channel. Lost it ever so slightly, very extended from the 88. Huge bull divergence on the daily as well. Even weekly. Yeah, it's forming a weekly bull divergence. I think this is one of the first times I've seen a weekly bull divergence. This is going to be a nice entry. Even if it's just for a bounce, this will be a nice play. 88. Didn't even touch it yesterday. Oh yeah, loving this as a bounce play. Watch for the bounce today, early today. Next, Amazon. Gap down and continue to sell off yesterday. Chart is in an overall bearish divergence. Let's look for that reaction towards this lower trend line today. I don't imagine that there's going to be anything like a crazy bounce or anything. A, B, C. Yeah, this chart remains to be in a sideways action. One of the big techs, so it's going to be harder to play. Wouldn't be my top watch. Next, BFT. Alright, so we got into this today or yesterday. Gonna want to see that hold of this trend line. Easy stop play. Looks like this trend line can be drawn differently. Let's draw a second one. Yeah, we're gonna need to see that hold of this trend line early today, or else it'll be an easy stop out. This bull pennant had a little bit of a fake breakout, fake out, low bear volume, sustained on the hourly, no divergences. So there's a lot of positions that we're going to be keeping eyes on this early today because of where the market is at and going. And we're still dropping. Wow. All right, next one, AAL. Nice gap and run today. Towards the end of the day, had a little bit of a sell-off, but that last 30-minute bull volume gives further confidence for the bulls. No divergences yet right now. We are a little bit overbought. So remember how I mentioned that we will be looking at first resistance around that 21.76. Still looking at it around there. Pre-market is already bought up. People want to get in. Pandemic vaccine plays are in now, and we've been in for I think last month or so. So now they are starting to work out. So consider adding to your vaccine plays. They will pay nicely. What I'm anticipating is holding it throughout 2021 should provide decent returns. AAL, AC, cruise lines, things like that. Silver, nice bull action yesterday. Decent volume, not significant though. Filled that gap from back here. Close at the high of the day. Would expect follow through today. Next, PTON. Now this should provide a great opportunity play. We are coming up really fast. Today, if we see that GP touch, would consider adding to the position. I was expecting a little bit more sideways action into the 0.5, but from the looks of it right now, we're dropping fast. Be cautious on this play though. Low bull volume. You're gonna want to see that curl first before taking a bigger sizing position, but that is a nice area for first entry. Next, ABNB. Lack of follow through. We were extended on the weekly. So lack of follow through on the bounce from the GP. This ticker respects the fibs very well. So let's see where we bounce to. We bounce to the 0.5. So overall, weak. I would expect another bounce coming up to around this resistance, 209, to form that head and shoulders. If not, there is a very likely scenario that we're just going to come down to revisit either the trend line or the lower trend line of the channel. But I love Airbnb as part of the vaccine plays. So looking to enter, especially if we touch this lower trend line. Let's see if that lines up with anything. So depending on how long we take to touch the lower trend line, could be looking at a confluence of 0.382. What if you were to draw it from this last move? That wouldn't work that well. Anyways, keep an eye on Airbnb. One of my top favorite plays, or top preferred play for vaccine play. Oh, all right, let's take a look at the market again. It is still a bull divergence. Four hours about to negate it. Already still a big bull divergence coming straight to that 0.382 right now. Dow still not seeing anything significant. Nas heading to that 0.786. Almost there. That is very extended from the 88. Huge opportunity. Don't drool. Let's get this. All right. Let's take a look at marijuana. APHA. Nothing significant. Decreasing volume. It's setting up nicely for a move. Is there a wedge? Slight descending wedge. Yeah, slight descending wedge right now. Key to hold 1892. Suncor. Now with Suncor, we're in the Canadian position, but I like to review the US because ticker provides more liquidity, more information. Overall, it's just easier to look at. So Suncor had a nice bull move, nice follow through. We can see increasing bull volumes here. Next resistance up is 22. Then after that, there's a huge gap fill all the way up to 24.54. Let's mark that. Big gap after that. Very bullish on Suncor. Well, generally overall, any of the oil plays, energy plays, looking bullish on them. I don't think we need to look at AC. We looked at AAL already. It's going to be a similar story. Let's get score. Gap down, sell off. We are near that trend line very fast. 38.58. It's a good spot for add is coming up. Right around that previous high of 36.10 would be a decent spot for an addition. Ultimately, from here, want to see a curl. All right, you know what? Last but not least, let's look at AC. Nice inverse head and shoulders playing out. Neckline has been broken, seeing a very nice follow through on increasing bull volume. No divergences yet. potential daily divergence to form if we don't break this 28.24 previous high. But once that is broken, looking at a key zone break, and this one's not right anymore. Let's redraw this. Next target after the key zone break, we'd be looking at 33.11. Then from there, extended target 1 to 1.618. We're looking at 41.60, which should bring us to the gap fill. Overall target 41.60. All right, that is it for today. Hope you guys enjoyed the content. Thank you for watching the video. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos daily. Also, check out our website at totalcontroltraders.com. We offer a 7-day free trial to our trading platform, our chatting community, where you can have access for 24/7. We review charts, trade ideas, and everything I reviewed live. Hope you guys stay safe and be in control. Thanks for watching, guys. I will see you in the next video.